traders, welcome to the TMT Stock Market Strategy video for Thursday, December 1st. Well, yesterday we had a little bit of weakness. Internally, we had major divergence in the markets. If you looked at and you know what to look for in the internals, we have our TMT trading model. And one we can show you is the advanced decline was negative all day. I mean, literally all day. And major market divergence, intermarket divergence, I should say. And yesterday, the S&P succumbed to some selling, but still held up relatively well. And that's because a lot of the mutual funds and money managers do a little window dressing of their own portfolio, looking to buy what's hot. And yesterday, banks were big because of bonds selling off and yields rising, and of course the crude oil trade. Looking to buy crude oil stocks, and as you know, the S&P is heavily weighted in oil stocks. So that kind of put a damper on any big sell-off. But yesterday, if that did not occur, if it was during the middle of the month, you would have seen the S&P at least down 30. I would say at least 20 to 30 handles. It was so clear as day, but with the window dressing, it is to be expected. So I don't expect a lot to happen. If anything, the markets try to at least stabilize or try to grind higher, which that's what happened yesterday. Now, moving forward, going to today, we did get the OPEC meeting in Vienna, which concluded yesterday, and I could talk about that for about an hour, but I'm not going to because it is a short video. I don't suspect anything big out of that. And again, remember, if they do agree, which they did, to certain type of cuts, some of them would really just freezes, not even a production cut. And we'll see if some of these nations will adhere to the agreement. Now, if oil were to pop any higher than above $55, you're going to have the U.S. shales start producing. They don't care. They're not involved in it, and that's going to put more supply back into the market. I think there's tons of supply already as it is. That's why they're trying to cut, and I don't think that's going to make any type of impact at all. If you read the numbers, you would understand what I'm talking about. But for the trade, we're going to take a look at crude oil, and we're going to take a look at what may be the trade coming up. And I'm really excited about that because I do think that that's going to be a big trade as well as gold. We're going to cover all of that right now. All right, let's get to it. So we see the UUP here. Here's the dollar ETF. You can see that clearly. And like I mentioned to you before, guys, that dollar move is for real. Now, we could come all the way back down to 25.60, and I would have no problem with that, and then we'd still be in a bullish state in the dollar. And I think that possibly could happen, but I think that the dollar will probably come right back to that 20-day moving average of 25.90, or even back down to the 25.60 base around a little bit, and then that'll be the gap fill, and then start to move higher and probably start looking for 2015 highs, which we'll get into once the dollar starts to move. Okay, now as you know, when we have higher prices in dollars, commodities definitely does get affected, aside from copper, what that's doing right now. What I want to do is take a look at what is crude oil doing and what is gold doing, right? We always looked at that. That's two of our main sectors that we look at as far as the commodity squadron is concerned. So we'll have the bullish percent ENER, all right? This is the bullish percent energy, and what this resembles is based on the point and figure charts of all of the energy stocks. And you can see here we're at 86%. We're elevated already as it is in the area of a possible market to roll over. Okay, now we just concluded yesterday in the meeting, so I do think that that it might take a day or so, but I would watch closely this oil trade, because I think oil, when it does happen, everybody is long oil, and if we cannot get, we made a high yesterday. This morning in the early morning session of $50.24. That's the area that you want to look for today. If we break above it, then I want to show you the crude oil chart here of what I'm looking for. Okay, so right now we're at $50.24. That was the high. This is the band that I've showed you many times. This comes from $50 to about $52. If we cannot take out this double top here, all right, that 52.22, and we cannot take that out, we start to roll over, I think all bets are off. I think crude rolls all the way back down again. Okay, that's the number, guys, 50.24. If we take that out today on a closing basis, more than likely we'll go to 52. If we close above 52, then 55 will be the next target, and then I would say that this chart looks much better to the upside once we break back above it. Okay, so right now you really don't want to do anything. You want to see if we break above it, then we look to get long for a move up to 55. Okay, if we can't break above it, that's going to be the better trade, is because I think everybody's going to roll right out of this crude oil trade. It's heavily one-sided, and it's just a matter of time when they start taking profits. Remember, crude oil, yes, did go down, but yes, it was up about 7%. So a lot of these oil stocks are overinflated and ready for at least a pause or a breakdown. So just keep an eye on that for that. So it's going to be a decent trade coming up. Gold's going to be another great trade. Okay, we're at 1173 right now, and I had a few emails, some doubters. Are you serious? How can that be possible? Well, it's possible because that's how gold trades. Gets everybody one-sided, and bam, it gets down. Everybody starts to buy it again, think it's going its way up, and then it goes lower again, and it continues to go lower and just breaks down. And this is how it's going to happen. If we lose this 61.8% retracement, 1173. You're going to be at 1080 to 1100, and you're going to see that real fast. Okay, so today's going to be a big area, and we're basically there now. We're below it now. We're trading at 1170. So watch this, because this is going to be the area that I think we're going to flush. And if that's the case, that's going to be an area where you want to start nibbling in again. I would not touch this on the long side yet. I think it still has a lot more work to do. And you can see here on GLD, we have that thin zone. So 105 is probably going to be that sweet spot. 107 to 105 is what I'm looking for in GLD. Okay, GDX been holding up relatively well, but remember, if gold starts to break down hard, these miners are going to get crushed, and that's something what I'm going to be looking for as well. Remember that thin zone, guys. All right, there's a 76.8% retracement, but there's really where the support is of $18. You break 18, you're going to flush all the way back down to 15. All right, that's GDX. Spiders, I want to take a look at our daily chart, but I just want to show you sometimes it's nice to look at just price. And here's a 15-minute chart. As you can see, the steepness of this rally is unsustainable. Okay, and I like to just look at price with candlesticks, and then I look at my Fibonacci retracements. Very simple, low to high. Here's a gap area that needs to be filled. We filled that small gap yesterday. We have another gap area here. More than likely, that'll get filled. That'll be that area here. Okay, but I'm actually looking for a deeper pullback, deeper retracement. Remember, this is just on assumptions of what Donald Trump is going to do when he becomes president and he's elected. Well, he is elected, but you know when he becomes president on January 26th, where it begins his tenure. So be careful here, okay? I don't want anybody to get hurt. I've seen this many times, and remember, I mentioned to you before, and I did some research when past history of Republicans, and Reagan stood out really the most. Market sold off pretty hard, even though it was starting to roll over. But when they took office, when Republicans take office, we usually get a sell-off first, and then they get the rally later on in the year. So spiders, here are some levels that I put for you guys: 217, 212.5, 210.5, and then the deeper areas, and that's the Brexit lows from July. But keep an eye on these areas here. A pullback, I believe, is inevitable. And does it pull all the way back down here? I have no idea. Let's just take it one step at a time. Next really main support area is going to be 218 and then 217. Okay, in spiders. Here's that 60-minute chart I want to show you. I mentioned negative divergence yesterday's early morning trade, and sure enough, we sold off a little bit. So this trade here we're looking for today is going to be 219.5 to 219. So that is that first gap area of support that needs to be taken out. Next is going to be the IWM, and again, a simple high to low from the election, 38%. This coincides nicely with this trend line area from way down here, back from this February. So that's going to be really my first take profit target area of 38% retracement of 127 in the Russell. And last is going to be the Qs. Same thing with the Qs. We still have this area here. We need to take out this consolidation area here, this supply. All right. Once we get through this area, I think it'll start to move much lower. A lot of these so-called FANG stocks, the Amazons, Google, most importantly, Apple, Facebook, are really weak, and that should put a damper on any type of big movement. If anything, the first index you want to short, if you're looking to do so, would be the Qs or the Nasdaq. Hope it helps, guys. Have a great day. We'll see you tomorrow.